So how the US election will impact the markets. So there are just a couple of things we want to look at, and then we'll go into our charts. But first of all, we need to do this. So this was 28th of June. I tweeted this. The events surrounding the US elections seem to always determine who wins the campaign. And then we had an example of the COVID and Trump and the impeachment and all of that. This was actually before the Trump attempted assassination. All right. So looking at how the US election impacts the markets, you need to understand a few things. The first thing is uh, have the market priced in the elections already. The first thing you need to understand is how whether the market has priced in the election results, and how do we determine that in terms of volume. The uncertainty which implies from the result of the elections affects the volatility of the financial markets, which can easily double. So the first thing we need to understand is that these events, they tend to bring in about market volatility, and that volatility doubles. So that's the first thing we need to know. And if I just pull out my charts, so let's say this is GBP USD on the 4 hourly time frame. So I don't even want to go to higher time frames. Just want to break it down from the 4 hourly time frame. So looking at GBP USD, of course, we've been trending to the upside all the way until this high. Okay. And then from here, just mark this. Okay. So market has been moving in this kind of a channel. You had 1, 2, 3 touches breaking these lows. Okay. So we had a break of these lows. We had a break of these lows. And then from here, let's just study price from around here. So from here, you can clearly tell that we have a low here. Okay. So meaning the dollar is actually stronger than the pound. So there is a possibility that the dollar will actually come all the way up to here. But let's see how that can happen, especially on the 4 hourly, keeping it simple. Okay, keeping it simple. Then from there, we have, of course, we have this strong break here. You don't want to ignore this strong break. So the market will come low. And then from this low, we have a low here. And then we have another strong break here. Okay. And then now we have another strong break looking very bearish with this formation of a lower low. So what could happen? Have a small pushback into this and then head back down here. But then in terms of volume, you can begin to see these are the reasons why we say the post-election days, they tend to bring in a lot of volume. These are not ordinary candles. So we can have this as NFP, can have this strong volume. You can look at that volume. Even when you look at another pair, let's say gold, you will be able to see actually the same thing we're talking about. Okay, so the same thing we talk about also happens with gold and so many other pairs. So looking at also gold from the 4 hourly, you can clearly tell here. So the first thing you need to know is overall there's going to be a lot of volume, and then the dollar is likely going to strengthen. So we have gold here, of course, that's been trending to the upside, forming higher highs. And then from here, we have a scenario where the market broke as this low. Okay, this was NFP forming a new lower low. And then, of course, we have this area which was broken and the market went to the upside. Okay, so this is a possible area, market coming to retest before it can continue to either come down or go back up. But to look at gold simply, because we want to see whether we can actually get a direct trading opportunity next week. So then this becomes our all-time highs, and then we have this as our new lower high, which is a resistance area, and then this. And then from this resistance area here, you can clearly tell there's a strong structural break here. Okay, meaning we could actually have a scenario whereby market could pull into this area, and then we get a confirmation to head back down. Okay, so especially on the lower time frame, what you want to do is wait for these areas. As long as price pulls back and doesn't break this, and then this, see a strong bearish candle here, we could have that scenario where the market could head back down. Okay, so that's the first thing you need to see. So the pricing is in terms of volume, and you can see the candles are big. And then the other thing you need to study is the political grid law. So here it doesn't mean who actually wins. The Senate, the one who wins, will either control the Senate or the House will be controlled. So these two things will be controlled differently, meaning every policy that this political party brings in will actually be scrutinized by the other party that is either controlling the Senate or the House. So those political locks are going to be there, will lead to delay and then policy and all of that. And then the next thing you need to understand is the history of these elections. How have they always been? So when it is a Republican president in office and when it is a Democratic president in office, what usually happens? If you look at the most recovery in market, it has actually been during democratic regimes. And the reason for that is because of, if you look at the 1929 economic crisis, okay, and then also you look at the 2008 crisis, those two crises stretched across different time frames. The person who was in office during 1921 economic depression was the Republican president. And then after that, we had a Democratic president. So the recovery happens in a democratic regime. The same thing with 2008, it was a Republican in office in 2008, and then following 2009 and the coming years, it was a Democrat, and the market was recovering. So you realize that the market was recovering during democratic regimes, and not necessarily because it was the Democratic Party. So these two events, they kind of have a role. But the most important thing you need to understand from here is this. However, the presidency has not historically been a primary driver of the financial markets, with the returns tending to be positive over time, absent financial crisis, regardless of who holds office. So regardless of who holds office, the thing is going to be positive over time. And by positive, we mean the dollar strengthening. Like we have now, if you study gold all along, gold has actually been bullish, stronger. But all of a sudden, we have this shift. Okay, so we have this shift, lower low being formed. So we are in a bearish downtrend, especially on the lower time frame. And that is the positivity we are going to see. So if you look at this with also other stocks and all of that thing, that is what is going to happen. So the election usually should scare you. Nothing is actually going to change much. Trade your strategy and then take advantage of the volume with proper risk management. Then we can actually be able to make some money. So